for $0.2 billion. That's how much money Japan just pledged to pour into a single company that didn't even exist 3 years ago. On December 11th, Japan's Ministry of Economy, Trade and Industry dropped a bombshell announcement that sent shockwaves through the global semiconductor industry. Rapidus, Japan's audacious bet to return to the cutting edge of chip manufacturing, will receive an additional 631.5 billion yen in research and development funding for this fiscal year alone. This isn't just another government subsidy. This is Japan declaring economic war in the global battle for semiconductor supremacy. For decades, Japan watched helplessly as its once dominant chip industry crumbled, losing ground to Taiwan's TSMC, South Korea's Samsung, and America's Intel. Now, the Japanese government is saying enough is enough. But here's what makes this story truly fascinating. Rapidus is attempting something that even industry giants consider nearly impossible. They want to mass-produce 2-nanometer chips by 2027, technology so advanced that only a handful of companies on Earth can even dream of achieving it. Today, we're going to break down exactly what this massive investment means, why Japan is betting everything on this moonshot, and whether Rapidus can actually pull it off. Let's start with exactly what happened on December 11th. Japan's Ministry of Economy, Trade and Industry, known as METI, officially announced that Rapidus will receive 631.5 billion yen in additional research and development support for the current fiscal year. To put that in perspective, that's approximately $4.2 billion at current exchange rates. This funding is specifically earmarked for research and development, meaning it will go directly toward the technical challenges of producing cutting-edge semiconductors. But here's what many news outlets missed in their coverage. METI didn't just announce funding for Rapidus. They also revealed a parallel initiative to support private companies developing AI-focused advanced semiconductors. This is strategically brilliant because it addresses one of Rapidus's biggest potential weaknesses, finding customers. By subsidizing AI chip developers who might become Rapidus customers, the Japanese government is essentially building a domestic ecosystem around their flagship semiconductor project. The ministry explicitly stated that this dual approach is designed to secure business partners and customers for Rapidus, ensuring that when their factories come online, there will actually be buyers waiting. This shows remarkably sophisticated industrial policy thinking from Tokyo, addressing both the supply and demand sides of the equation simultaneously. To understand why Japan is making this enormous bet, you need to understand the painful history of Japan's semiconductor industry. In the 1980s, Japan absolutely dominated global chip manufacturing. Japanese companies controlled over 50% of the worldwide semiconductor market. Names like NEC, Toshiba, and Hitachi were synonymous with cutting-edge technology. American politicians genuinely feared that Japan would achieve technological supremacy over the United States. But then came what Japanese economists call the lost decades. Through a combination of trade pressure from Washington, the bursting of Japan's economic bubble, and strategic miscalculations by Japanese executives, the industry collapsed. Today, Japan's share of global semiconductor manufacturing has plummeted to roughly 9%. The chips powering your smartphone, your laptop, your car, they're almost certainly not made in Japan anymore. Meanwhile, Taiwan's TSMC rose to dominate the industry, producing over 90% of the world's most advanced chips. This concentration of critical technology on a small island just 100 miles from mainland China keeps military strategists and business executives awake at night. The COVID-19 pandemic exposed just how fragile global chip supply chains had become. Car factories worldwide shut down because they couldn't get simple semiconductors. Japan, once the world leader, found itself desperately dependent on foreign suppliers for technology essential to its entire economy. Let's talk numbers, because the scale of Japan's commitment to Rapidus is truly breathtaking. With this latest announcement, total Japanese government support for Rapidus now exceeds $10 billion. To be precise, previous funding rounds had already committed approximately 920 billion yen, and this new 631.5 billion yen allocation pushes the total well past 1.5 trillion yen. This makes Rapidus one of the largest industrial policy bets in Japanese post-war history. The company itself was only founded in August 2022, making it barely 2 years old. Yet it's already received more government funding than most Japanese corporations see in their entire existence. Rapidus has partnered with IBM to access cutting-edge semiconductor technology, essentially licensing the American company's 2-nanometer chip architecture. They're building a massive fabrication facility in Hokkaido, Japan's northernmost major island, chosen partly for its cold climate, which helps cool the energy-intensive chip manufacturing process. The company employs hundreds of engineers, many poached from Japan's existing semiconductor companies and some recruited from overseas. Their timeline is aggressive. They aim to begin pilot production of 2-nanometer chips by 2025 and achieve mass production by 2027. For context, TSMC and Samsung are also racing toward 2-nanometer technology, meaning Rapidus is competing head-to-head with the world's most advanced chipmakers. The economic implications of this investment extend far beyond a single company. If Rapidus succeeds, it could fundamentally reshape Japan's economic trajectory for the next several decades. Japan's economy has struggled with stagnation for 30 years, and policymakers have desperately sought new growth engines. Advanced semiconductor manufacturing represents exactly the kind of high-value, high-technology industry that could revitalize Japanese economic dynamism. The Hokkaido facility alone is expected to create thousands of direct jobs, with many more in supporting industries. Suppliers, equipment manufacturers, logistics companies, and service providers will all cluster around the new chip factory. Local officials in Hokkaido are already preparing for an influx of workers and the economic transformation this could bring to a region that has struggled with population decline. Beyond jobs, there's the strategic dimension of supply chain security. Japanese automakers, electronics companies, and technology firms currently depend heavily on chips manufactured in Taiwan and South Korea. This dependency became painfully apparent during the pandemic when chip shortages forced Toyota, Honda, and Sony to slash production. A successful Rapidus would give Japanese industry a domestic supply of the most advanced semiconductors, reducing vulnerability to geopolitical disruptions and supply chain crises. This is particularly important given rising tensions between China and Taiwan. For ordinary Japanese workers and businesses, this massive investment creates both opportunities and uncertainties. Engineers and technicians with semiconductor experience suddenly find themselves in extraordinary demand. Rapidus has been aggressively recruiting, offering competitive salaries that have pushed up wages across Japan's entire technology sector. Young Japanese graduates who might have previously sought jobs at established companies are now considering careers at this ambitious startup. Japanese suppliers are scrambling to position themselves as potential Rapidus vendors. Everything from specialty chemicals to precision manufacturing equipment will be needed, and domestic companies that can qualify as suppliers stand to benefit enormously. The ministry's decision to also support AI chip developers creates additional opportunities for Japanese technology companies to participate in this ecosystem. However, there are concerns as well. Some economists worry about the opportunity cost of such massive government spending. Could this $10 billion have been better spent on healthcare, education, or other priorities? Others question whether the government is essentially picking winners and losers in the marketplace, potentially distorting competition. Japanese taxpayers are ultimately funding this bet, and if Rapidus fails, they will bear the losses. For global competitors, Japan's aggressive entry into cutting-edge chip manufacturing adds another player to an already intensely competitive field, potentially leading to overcapacity and price pressure across the industry. The expert community remains deeply divided on whether Rapidus can actually succeed. Semiconductor industry veterans point out that building cutting-edge chip manufacturing capability is extraordinarily difficult. It took TSMC decades of continuous investment and learning to achieve its current technological leadership. The idea that a startup, even one backed by billions in government funding, could catch up within a few years strikes many observers as unrealistic. Manufacturing 2-nanometer chips requires precision measured in individual atoms, equipment costing hundreds of millions of dollars, and expertise that takes years to develop. Critics argue that Japan might be better served investing in mature chip technologies where success is more achievable. However, supporters counter that Japan cannot afford to aim low. The semiconductor industry is winner-take-all, and companies making older, less advanced chips face relentless pressure on margins. Only by reaching the technological frontier can Japan build a sustainable position in this critical industry. Market reaction to the announcement was generally positive. Japanese semiconductor-related stocks saw modest gains, and the broader technology sector interpreted the funding as a sign of continued government commitment. International investors are watching closely, as success for Rapidus could signal a broader revival of Japanese technological competitiveness. Looking ahead, several critical milestones will determine whether Japan's semiconductor gamble pays off. Construction of the Hokkaido fabrication facility is progressing, with the massive cleanroom structures taking shape. These factories are among the most complex buildings humans have ever constructed, requiring air purity thousands of times better than a hospital operating room. The next major milestone comes in 2025, when Rapidus aims to begin pilot production of 2-nanometer chips. This will be the first real test of whether the company can translate IBM's technology into actual working semiconductors. Initial yields, meaning the percentage of chips that actually work, will be closely watched by industry observers. Mass production by 2027 remains the ultimate goal, though many analysts consider this timeline extremely ambitious. For comparison, Intel, with decades of experience and vastly greater resources, has repeatedly delayed its advanced chip programs. The AI chip support program announced alongside the Rapidus funding will also be important to watch. If successful, it could create a pipeline of domestic customers ready to purchase Rapidus chips, addressing the crucial question of who will actually buy these semiconductors. Without customers, even the most advanced factory is just an expensive showpiece. So what should you take away from this announcement? First, Japan is absolutely serious about reclaiming a position in advanced semiconductor manufacturing. This is not a one-time investment, but part of an ongoing commitment that will likely see additional billions flow to Rapidus and related companies in coming years. The Japanese government has decided that semiconductor independence is a national security priority, and they're backing that decision with real money. Second, the outcome remains genuinely uncertain. Rapidus is attempting something extraordinarily difficult, and success is far from guaranteed. The company faces competition from TSMC and Samsung, both of which have enormous head starts and continue investing aggressively. However, Japan has surprised the world before, and writing off Japanese technology would be premature. Third, this investment reflects broader trends reshaping the global economy. Semiconductor manufacturing has become a geopolitical battleground, with the United States, China, Japan, and Europe all pouring billions into domestic chip production. The era of pure economic efficiency, where chips were manufactured wherever costs were lowest, is giving way to an era of strategic competition and supply chain nationalism. For investors and business professionals watching Japan, this Rapidus story is one to follow closely. The success or failure of this ambitious project will tell us much about Japan's ability to reinvent itself and compete in the industries of the future. Keep watching Japan Business Insider for updates as this story develops.